welcome back. You're still tuned into Market Fatafat right here on ET Now, and this is the show where we take you through all the stocks that are buzzing in trade today. And for the market, it's still down 50 odd points below that 25,000 mark. But let's get going with all the stocks that are buzzing. And Nilesh Jain, head of derivatives and technical research at Centrum Broking, is now joining us. Nilesh, Engineers India is the first stock that you've picked for us. Tell us, what do charts indicate for this stock?
Hi, very good afternoon to you. Well, Engineers India, this particular counter has been outperforming in last couple of weeks. Now, the stock on daily time frame chart, if you just pull up its previous 1 year chart, you can see the counter has formed a big rounding bottom formation. And interestingly, today it has given a good breakout from the same with a good volume participation. So the technical setup looks very strong. The counter is trading well above all long-term moving averages as well as short-term moving averages. So technically, it looks like it is heading towards 215 to 218 from a short-term perspective. So it can be bought at current level and on declines with a stop loss below 206. The structure looks positive.
Levels to watch out for in Engineers India, that's stock on Nilesh's radar. But let's move on, and Hindustan Copper is a stock to watch out for because very strong set of numbers is what the company has reported yesterday post-market hours. Revenue for quarter 4 has come in at 731 crores compared to 328 crores, which is a jump more than double on a sequential basis. Net profit has also come in at 187 crores compared to 63 crores, so that's a 200% sequential jump coming in. EBITDA has also seen quite the jump coming in from 108 crores this time last year to 267 crores in quarter 4. EBITDA margins have also seen an uptick at 36.5% compared to 32.8%, which is up 365 bits on a sequential basis. So very strong set of numbers coming in. The stock was holding on to some stellar gains earlier in the day, has simmered down and lost some of those gains, but nonetheless a 1.1% uptick is what we're seeing on the stock as we speak.
Alright, and let's also talk about NMDC. Then the stock is also in focus in the back of results that is reported that the stock is down 2.5%. Revenues have come in slightly above what the street was working with at about 7,005 odd crores. But EBITDA margins, that has disappointed the street at 29.3% versus 36.1% that the company reported in the previous quarter. So on a sequential basis, numbers have clearly been on the weaker side and lower than what the street was working with. And that is the reason the stock is sitting with a cut of nearly 2.5% in today's trading session.
Okay, so a weak quarter for coming in for NMDC, 2.5% lower. But another cue to watch out for is going to be Tata Sons. Tata Sons will be holding their quarterly board meeting to discuss performance of group companies, the requirement to list as per RBI norms, among other concerns. Anurag Joshi is joining us with what to expect from this meeting. Anurag.
Tata Sons, the holding company of the Tata Group, is convened its quarterly board meeting on Thursday. Now, the board meeting of Tata Sons will review the holding company's financial performance and also take stock and review the performance of all the companies in the Tata Group, and notably some of the companies which the parent wants to improve their performance. One of the key things that is likely to come up in the board meeting is the listing plan of Tata Capital, and also the negotiations about seeking a waiver for Tata Sons from doing an IPO. Now, Tata Capital has recently pre-filed confidentially its draft red herring prospectus with SEBI and stock exchanges for an IPO, and it is progressing on that plan. But for Tata Sons, the holding company, they had earlier sought a waiver from listing their shares, but that last year that was declined by the Reserve Bank of India. So that is a matter that is likely to come up for discussion. Notably, also the board meeting will discuss the performance of some of the units which like Tata Teleservices and its AGR dues, and also Tata Digital, which the parent wants to pull up its performance, especially some of the platforms like Big Basket, which it wants to catch up with the other peers. Tata Sons had reported a profit after tax of 34,654 crore rupees in FY24, and just last year, Ratan, after the passing away of the patriarch Ratan Tata, Noel Tata, who's the Tata Trust chairman, Tata Trust owns 66% stake, so he had assumed the position as a director on the board of Tata Sons.
Tata Group stocks in focus on the back of this news piece. Anurag, thanks so much for joining us with all those details. But let's shift focus back to stocks that are buzzing in trade today. And Aurobindo Pharma, Rabinder, brokerage houses continue to remain very cautious. The stock is also falling in trade. But tell us, what do brokerage houses have to say on this stock?
Well, as Kotak Security has come out with a note on Aurobindo Pharma, and they have maintained their sell rating and cut target price to rupees 1100 from 1145. They say that they expect a further delay in ramp up of PenG PLI project due to a recent fire incident. Even as a company mentioned achieving encouraging yields consistently in March prior to the plant closure, and due to fire, Kotak Security has reduced EPS estimate by 1 to 7% for FY26 to 27 due to a lower US and API sales. And also ICICI Security has come out with a note on Aurobindo Pharma, and they have reduced rating from buy to add and cut target price to rupees 1330 from 1445. So back of this cautious brokerage note, stock is down more than 3%.
Okay, so stock taking a knock in today, straight 3% lower on the back of cautious brokerage notes coming in. Nilesh, coming to you, JM Financial, this is a stock that you've picked out for us, a stock that's up 5.5% as we speak today. Last 3 months as well, a 35% almost uptick is the level that the stock has seen. Take us through what are your expectations for the stock and what levels are you spotting?
Right, so this particular stock, if you see, this counter has been forming a high top and high bottom formation. It has formed a good base formation in the zone of 95-96, and the breakout that we saw that came at the level of 120. So now the next target on the upside comes somewhere around 134 to 138. So that's the trajectory where the counter can move, and at present level one can hold on to the long position. Fresh long can also be initiated with a stop loss below 125. The stock has a potential to touch 140 as well from a short-term perspective. So it's a good buy. Even if you look at the volume participation today, which is higher than the average, so good accumulation can be seen in this particular counter as well.
Okay, so accumulation is the word coming in for JM Financial. But Cummins India, Kanishka, it will be reporting its numbers later today, and its parent company had lowered their guidance. What are the estimates for Cummins India?
That's right. Shesha, shares of Cummins India are in focus today as it's going to release its March quarter numbers. So just to remind you, the company's parent, that is Cummins Inc., had reported its results for the quarter earlier this month and suspended its guidance for the full year. It had said that it is not providing an outlook for revenue and profitability due to the ongoing global uncertainty. Now, while the parent did acknowledge that the outlook for the remainder of the year remains unclear, but it does expect to reinstate its forecast when conditions become more stable. Now, Cummins Global had reported a 3% decrease in net sales, totaling $8,174 million. Now, its sales in North America declined by about 1%, while international revenues had fallen 5%, primarily due to reduced demand in Latin America and the Asia-Pacific region. Now, given that there's been a decline in the global revenue in the Asia region, let's watch out for how India business has performed, particularly ahead of the results. The stock is up about 1% in trade today.
Stock is holding up with gains of nearly 1%, Cummins India. But apart from that, let's also talk about NMDC Steel. It reported its numbers where losses have narrowed on a year-on-year basis, and that is the reason the stock is holding up with gains of over 1% as we speak. Revenue saw an uptick of a solid 55% on a year-on-year basis. EBITDA loss narrowed to about 290 crores versus 995 crores that the company had reported last year, and EBITDA loss and consolidated net loss has nearly halved on a year-on-year basis. So better than expected and stronger set of numbers on a year-on-year basis, and that is the reason the stock is holding up in the green in an otherwise weak market.
Okay, so weak from NMDC, but good set of numbers from NMDC Steel for the quarter gone by. But Nilesh, coming to you, BHEL is the stock that you've picked out for us. The stock is up almost 3% as we speak, 2.8% to be precise. Last 3 months itself, the stock is up more than 40%. Give us a sense of what to expect going ahead and the key targets that you're watching out for.
Absolutely. So this particular counter is another outperformer. In the recent time, we have seen BHEL, BEL. In fact, both the stocks have a similar setup. But looking at the BHEL, this particular counter setup, it has formed a good rounding bottom formation. The breakout, which came at the level of 255. So now the target of this particular set pattern comes somewhere around 290. So these are the medium-term target for this particular stock. So any dip from here should be used as a buying opportunity, can be accumulated in a staggered manner. The stop loss should be placed somewhere around 256, and from a short-term perspective, 280 will be the target, and positionally, the stock has the potential to test 300 as well.
Okay, so the stock could touch levels of 300. That's the view coming in on BHEL on the charts. But Aarti Industries, Rabinder, some brokerage reports over here as well.
Well, yes, Aarti Industry is in focus on back of brokerage note, where UBS has come out with their note, and they have upgraded Aarti Industry to buy from sell and raise target price to rupees 625 from 1615. They say that the stock is currently down about 35% from the peak of August 2024, and UBS expect a meaningful improvement in company's performance, aided by new CEO strategic initiative to optimize cost and new growth drivers. And the key reason for the upgrade is that the industry cycle is gradually improving with low inventory levels, and MMA volumes are increasing steadily over the last 2 quarters, even though prices have been stable. And the third one is that the strategic steps are being taken to boost the efficiency. They say that the stock is also trading below its 5-year average EV to EBITDA, and UBS say that so a bullish note report, but the stock is not reacting positively, and the stock was up by 2 to 3% in the early trading session, but now it has erased all its gain and trading around flat level.
Okay, so that's the take on Aarti Industries in focus, and on that note, we'll slip into a very short break, and viewers will be right back with more buzzers, so you stay tuned.
Welcome back. You're still tuned into Market Fatafat on ET Now, and L&T, that's the next stock on our radar this afternoon. Kanishka, tell us, why have you picked up this stock? Advise the stock buzzing in trade today.
Absolutely. So it is in focus because L&T aims to create a multi-billion-dollar defense business, which is a sharp rise from 6,185 crore rupees worth of orders in the previous fiscal year, as per an ET report. Now, this move comes on the back of the government's push to upgrade and modernize military. Now, L&T has a broad presence in the defense sector, manufacturing warships, patrol vessels, armored vehicles, artillery guns and missile systems, among others. Now, R. Shankar, who's L&T president and CFO, he said that the defense sector has the potential to be a multi-billion-dollar segment, and that it is an intrinsic part of L&T's plan to fill its shipyard with defense orders and expand if needed. The stock is up about 0.5% in trade today, and if you look at the move in the past month, it has seen an uptick of about 10%.
Okay, so that's the take on L&T, and in focus on the back of a positive news flow, 0.5% uptick seen on the stock. But Nilesh, coming to you, Bharti Airtel is the stock that you've picked out for us on the charts. Do you foresee 2,000 anytime soon for the stock?
Absolutely. So that's the target that we are eyeing for. This particular stock, although witnessed some profit taking in between. So looking at the recent momentum that we have seen in last 4-5 consecutive sessions, the stock has once again regained the positive momentum, and a new record high is something that we can expect from a short-term perspective. The structure is very strong. The stock has a very strong support at 1800. There's the 50-day moving average support as well. So given this kind of a positive texture in this particular counter, we are expecting this particular stock to move towards 2000 levels from a short to medium term perspective, and the stop loss can be placed at 1800.
Okay, so those are levels to watch out from Bharti Airtel. Let's move on and talk about a stock that's in focus today on the back of a brokerage note coming in. Shilpa Medicare is the stock that we're talking about. Today we have a note coming in by Antique, wherein they've maintained the buy rating but cut the target price to 1,090 compared to 1,525. Remember, numbers came on Monday and it was a mixed set of quarter 4 earnings for Shilpa Medicare. And for quarter 4, they reported revenue up 13%. That was led by a 73% strong year-on-year growth in the FTF segment. Now, what Antique says is Shilpa Medicare's exclusive agreement with Orion for the recombinant human albumin in Europe highlights strong commercial potential with milestone payments expected in FY26. However, on the flip side, they're seeing that approval delays for partners Uniclive MDA for their OLC drug due to manufacturing issues would defer revenues to FY27. On the back of this, they've cut their FY26 and FY27 revenue estimates by 16% and 20% respectively, moderating the API growth assumptions and revenue forecast in some of the opportunities. They've also lowered their EBITDA margin assumptions to reflect sustained higher operating expenses, and they continue to see strong monetization potential in Shilpa Medicare's pipeline. So mixed note coming in, but on the back of a target price cut, the stock is in focus, has recovered slightly, and 0.6% gain is what the stock is seeing as we speak.
Well, yes, and Adani Ports and SEZ, that's the stock on Ravinder's radar this afternoon. And Ravinder, Motilal Oswal has come out with a report, is it?
Motilal Oswal has come out with a note on Adani Port, and they have maintained their buy rating with target price of rupees 1620. They say that the Adani Ports continue to solidify its position as a leader in the port and logistics sector through strategic acquisition, operational enhancement, and ambition expansion plan. The company hold approx 27% market share in all India cargo and approx 45% market share in container cargo handled in India as of March 2025. And companies' diversified cargo mix and ongoing infrastructure investment are expected to support the target of companies 505 and 515 MMT cargo handling in FY26. Motilal expect Adani Ports to report a 10% growth in cargo volumes over FY25 to 27, and this will drive a CAGR of 16% and 16% and 21% in revenue, EBITDA, PAT over FY25 to 27. So back of this note, stock is up approx 1%.
Okay, 0.7% gain coming in Adani Ports. And let's move on. Nilesh, Concord is the chart that you've picked out for us, Container Corporation of India. Give us a sense of what can we expect on the charts and the key targets to watch out for.
So Container Corporation, it has formed a good base formation in the zone of 620 to 650 earlier, and now today, in fact yesterday, we have seen a good breakout from its long-term 200 exponential moving average with a good participation. So after yesterday's move, today we are witnessing a follow-up move in the yesterday's action that we saw. So overall setup is indicating that counter has a potential to test 800 level from a short-term perspective. That can be the immediate target, followed by 825, and 750 is a very strong support. That's the breakout zone that we saw yesterday. So 750 should be the stop loss for the long position, and the structure for Concord looks positive.
Structure for Concord looks positive. That's the word coming in. 750 is the stop loss. But let's shift focus to some defense counters then. Cochin Shipyard, Kanishka, tell us the stock is holding up with gains of over 1.5% today.
That's right. Cochin Shipyard is in focus as sources have indicated to ET Now that the government is expected to update the status of the PSU shipping company from Mini Ratna to Navratna. Now, sources have said that the proposal is being discussed by the group of secretaries as of now. Once approved, the Department of Public Enterprises shall make an announcement. Apart from this, we must note that the status upgrade will likely provide greater operational and financial freedom to the company's board. Now, following this news development, the stock has seen an uptick of 1.5%. Like you said, it's actually been one of those leading the defense rally with 30% gain seen in the past month.
Okay, so that's the take on Cochin Shipyard, and that's the news flow on that front as well. Let's move on from there and talk about EID Perry, another earnings candidate. It's an inline set of numbers coming in on a consolidated basis for this company. Revenue has come in at 6,811 crores compared to 5,557 crores, which is up 22.6% year on year. Net profit has come in at 287 crores, which is up slightly more than 30% on a year on year basis. EBITDA has also seen an uptick at 13% on a year on year basis, coming in at 530 crore rupees, rupees. EBITDA margin on the flip side has seen a little bit of a contraction coming in at 7.8% compared to 8.4% year on year. The board has approved an investment of up to 350 crore rupees in Perry Sugars Refinery India, which is the company's wholly owned subsidiary, and this investment, to be made in one or more tranches, is intended to support debt reduction and strengthen the company's strengthen the subsidiaries' net worth overall. So that's the take on EID Perry, and inline set of numbers coming in. Stock has fizzled out from the day's highest point, 0.5% uptick on the stock as we meet.
Well, yes, so EID Parry is in focus on the back of that. But Kanishka, Nilesh and Rabinder, thanks so much for joining us with a list of all the stocks that are buzzing in trade today. But as we wind down on this edition of Market Fatafat, the cabinet meeting after a gap of 2 weeks approves the extension of the modified interest subvention scheme for FY26. My colleague Prakash is now joining us with more details on this. Prakash, over to you.
The Indian cabinet meeting has just concluded, and we are learning from our associate that the cabinet has given its nod to various proposals. And the first one is with regard to MSP for Kharif crops. We're given to understand that the cabinet has approved MSP for Kharif crops for the 2025-26 marketing season. MSP has been increased for 13 Kharif crops, a very significant development coming in. Along with that, the cabinet has also approved the extension of modified interest subvention scheme for FY26, where government will provide interest subsidy benefit to the farmers under this scheme. A very significant development coming in. Loan limit under Kisan Credit Card scheme has also been enhanced from rupees 3 lakh to 5 lakh. In addition to that, last but not the least, expansion of Badvel-Nellore highway project with an outlay of rupees 3600 crore has also been approved by the Indian cabinet. However, an official announcement has not been made, but the government is expected to hold a press briefing at 3 p.m. today to make formal announcement. Back to you.
Okay, well, on that note, we'll wrap it up on this edition of Market Fatafat. From Achesha, me and the team that put this show together, thanks so much for watching. But as we bid you goodbye, you still stay tuned to ET Now, because closing trades is up next.